tell you how tech giant Nvidia becomes the first ever company to hit the 4 trillion market cap. The stock is soaring away in trade on the back of this. The chip maker, in fact, benefited heavily from the AI boom. But remember that it crossed the 3 trillion market cap in June last year. To discuss more on that front, I'm being joined in by Wang, principal analyst and founder, Consultation Research in California. Thank you very much, Ray, for taking the time out and joining us this evening on ET Now. Given the fact that how do you see the rise in terms of the 4 trillion number, it perhaps is not surprising for you given the aspect that you have already predicted what it's looking like for the company. But very few competitors in the chip market with a visionary founder. Do you think that's the combo that has worked for the rise of the company?
That is the combo that has worked in Silicon Valley for almost every successful company. Founder, owner, this has been the model that's actually been the ability to actually give rise to a vision. And Silicon Valley is built on those visions. But when you think about Jensen's visions, it's multiple layers. This is not just about chips. This is about revolutionizing the complete computing industry and how we interact. And it's not just AI. It goes all the way from chip to software to the future in terms of how we actually make decisions, how we actually build out the next set of industries going forward. And so this area on 4 trillion, that's just the beginning. This stock could get easily to 6 trillion, 8 trillion. And part of it's because not just the sovereign data centers that are going to emerge, but it's also the software applications that are being designed for the future, the networking capabilities going forward, and of course, what we do with robotics and what we do with humanoids and artificial intelligence in a physical presence. And so this is going to be everywhere. It's going to be pervasive. And when you look at that NVIDIA ecosystem, that's what you should be looking for, is all the multiple sets of businesses that are going to be built on the backs of one set of computing platforms.
You know, Ray, in fact, as you point that out, given the aspect of the rise as well, but is Nvidia's current valuation justified, or are we seeing signs of a tech bubble, in your opinion?
Well, there is a tech bubble in certain areas of AI, but we've already seen the winners in chips at this moment is going to be Nvidia. It's going to be companies that build those chips like TSMC, ASML, in terms of lining that. There's going to be other suppliers that are going to be at the edges. And then the next layer is going to pop up, which is really what's happening with the hyperscalers that are using the chips. That boom is going to go through for the next 24 months. And then after that, you're going to see the boom in applications. And of course, what's going to happen in physical AI and robotics. So we're just at the beginning of this boom. And so I would say that if you're looking at the internet and you're wondering what you're going to do with Cisco stock or what you're going to do with Intel, we're at that same point where you're saying, wow, this is the beginning of the revolution. And there's a lot more miles to go, or a lot more kilometers to go.
You know, a lot of kilometers to go, but what would the factors be for that? Because when we're looking at the earnings as well, is it justifying the valuation?
Right now it is, because what we haven't taken into account is a lot of sovereigns have not made the investments. We see that most of the investments today are made by the hyperscalers. So you see investments by Meta and Google and Amazon that are buying Nvidia chips and Oracle. But what we're about to see is the next boom where governments are actually purchasing those chips so that their countries can be competitive. And so the corporates have gone through that wave. Now the sovereigns are going to go through the next wave, and that's going to justify the next set of valuation capabilities. That hasn't been built in yet in most models.
All right, so that is the way looking forward. But Ray, let me ask you this. So what are the risks that in fact could derail Nvidia's current momentum, or could anything risk even AI in general? But of course, talking about the plus points, but I'm sure there are some risks and loopholes as well.
There's always risks in investing, and you're absolutely right. The risks today are mostly around trade wars. It's also about what's going to happen in terms of how people use compute. Will they be much more efficient? We have risks on the energy side. We might not have enough energy to power all the chips that are going to be produced. But I think those are lower factors when you look at what's happening in the marketplace. The trade risk is definitely real. The war with China over time, China will probably come up with a maybe more efficient chip or more efficient algorithm. And so those wars continue, but that's the part of innovation. We saw that in the internet age. We're going to see that again now in the age of AI.
can focus on China's growth really here in chip making when you speak of the aspect of competition as well. But we're also looking at a market where there's barely any competition. Why would that be?
This is a hard thing to do. I mean, getting the new chipset right is something that requires a lot of capital investment. You have to have strong capital markets. You have to have strong innovation in place. You have to have the right government policies or no government policies, depending where you are, to be able to make that happen. This is a huge capital investment, and sometimes you get it wrong. There are many failures along the way in the chip business, and we saw that through the 80s, and the 90s, the 2000s, the 2010s. Companies all tried to unseat Intel. And at the end of the day, Intel was a stable, very profitable business, but then they didn't put back enough money towards innovation because shareholders held them back. And that gave the rise to Nvidia. And this is why it's really important when you have a founder leader that's driving that innovation. You've seen that with Apple, you've seen that with Meta, you've seen that with Salesforce. These founder leaders have a vision, and when they can execute that vision, they become very successful. When the shareholders come in to harvest the profits, that's when we start to see the decline of companies where they're only spending 4% of their revenues on innovation. That's the death of a company. You've got to be spending 10%, 15% if you're continuing to push the limits. And so we've seen that when we studied over 1,000 companies in the Valley. The key is that ability to have a visionary leader, have the R&D spend that's available, and of course, have unfettered capabilities where you have boards that are aligned with what the founders' visions are.
Absolutely. That's a permutation and combination that has to work for a company. But circling back to what you had said in terms of risks, the word that everyone's talking about today, tariff. Ray, how do you look at that? The tariff impact on chip makers. What do you make of it?
I think the tariff impact is really an industrial policy and a foreign policy issue. It's an economic and trade issue at the same time. The U.S. and the Western world is very dependent on where chips are being made and where technology heads. And it's a question of what philosophies you're going to bet on in the future. With AI, what's really important to understand is and digitization, we are giving a few people massive capabilities to control many people. And what we have to be is very careful in terms of how those technologies are deployed. And so if you believe in a free and an open society versus a closed and centralized approach, right, you're going to have different battles along the way. And those are the ideological battles that are being fought at this moment. People are being asked to pick a side, whether they go BRICS or G, or whether they go China or US, they're being asked to make a decision. And those decisions have huge implications for policy over the next few decades. That's why there's so much motion on the tariffs. The tariffs are to say their tariffs are designed to create independence for the countries that are there so that they're going to be independent and not too dependent on countries or philosophies they don't believe in.
The other aspect is perhaps you spoke about Intel, but Ray, is it, the other story would be, is Nvidia's dominance today comparable to Microsoft perhaps in the 90s or Apple post 2007? Or is this a different level of systematic tech? And rather, how is this different?
Oh, this is different because what Nvidia has done is they've taken what Microsoft, Intel, and Cisco did and combined it all into one. They've learned those business models and they've built moats across all those business lines. And so if we look at Jensen's strategy for now, you're only seeing 1/10 of what they're going to plan. And those plans dominate almost every aspect of industry, whether it's healthcare, whether it's, transportation, or whether it's in defense technologies, or whether it's in creativity or entertainment. They've thought through a map that basically says, how do we go and actually be pervasive in each of these industries? So that market, they're executing to that. And that's something that whether Microsoft or Intel or Cisco at its prime, they were not thinking about it in the same way or the same level of depth that Nvidia's teams are.
Talking about what Nvidia has managed to do, what would that essentially mean, Ray, for the future of global tech dominance? Is it shifting clearly from software to compute hardware?
No, it's actually a combination. What we actually always know that the chips power everything. The software creates the innovative layer, and of course, the applications that are built on top of that stack are really how people actually interface, and that's the user experiences. Those things haven't changed. It's a question of how more embedded or how tightly coupled they are to be able to support innovation, new types of employee or customer experiences, new types of commerce capabilities. That's what's actually being put to test. And it's really a matter of how we're going. I think the only factor that we have to worry about is energy and our ability to actually drive down the cost of energy. It is an energy war in the future, and these chips have to become a lot more efficient. But all across the board, if you think about the cost of energy production, if you can get it down to 3 cents a kilowatt hour, that's where you're going to see some amazing, amazing innovations. But right now, the rest of the world are operating. China might be operating at 8 cents a kilowatt hour. The US be operating at 15 cents a kilowatt hour. You look at Europe operating at maybe 25 cents a kilowatt hour. That is the biggest barrier to all this innovation is energy.
One of the things that we've spoken about right at the top as well is what really worked in their favor, Ray. And what lessons perhaps can investors and tech leaders learn from Nvidia's journey to the top, in your opinion?
I mean, when Nvidia first started out, we just looked at them as a graphical chip, company. We're like, oh, it's great. It's for games. It's for other things. I think people, I mean, very few people realize the complete vision and how it could get there. And if it wasn't for generative AI, if it wasn't for those advancements, you wouldn't see this big shift really in terms of on Nvidia. And they had the right chip at the right time. But here's the thing: they have the right chip at the right time for the next five levels of transformation that are out there. And I think that's what we have to look at now as we think about innovation and betting on innovation. I mean, you never know what could happen, right? I mean, in the age of AI, a 10-person startup could potentially take out $1 billion company, right? We're looking at AI exponential scale. These are companies that are AI native. These are companies that are getting 10x to 100x gains, and they're companies that build business models on data, or what we call data inc companies. So we're going to see the next set of innovators. They're happening right now. I mean, there's a gentleman who had built out big professional services for example, at TCS Interactive and at Wipro and at Tech Mahindra and at Plus companies. This man, Sunil Karkera, I mean, he's creating an AI-based services company that's able to deliver 10x, maybe 100x returns, right? There's a company that we know that's basically able to take IT budgets that are in the hundreds of millions and bring them down to tens of millions. This is all happening right now in this AI evolution. And we think these new categories of companies called AI exponentials are where the innovation is at.
Right, and like you said right at the top, many more kilometers to go. But Ray, is the GPU still the gold standard for AI compute, or is it something else?
Well, it's the GPU today, it's the TPU in the future. And of course, when we go to quantum and high performance computing, that convergence is going to happen. Is it going to happen in 3 years? No. Is it going to happen in 7? Maybe. In 10? Definitely. And we're going to see that kind of innovation occur. And then, of course, we're going to see the way we look at power change. We're going to go from, gas-fired, carbon-based approaches to hopefully small modular reactors, which will lighten the load on the carbon footprint. And of course, more renewables and battery, so that we can actually have baseline power loads that make sense compared to what we're doing today.
All right, Ray, appreciate you joining us on the show tonight and sharing with us your perspective. But like you rightly said, miles to go before we see how this boom's only going to get larger, and perhaps we'll reconnect with you then when we do look at how that has evolved down the line. But for the moment, thank you very much for joining us. For now, we leave it at that.